point out briefly, here's something about a Roth versus traditional. In a Roth IRA, income limits matter. The IRS states if you earn over $140,000 per year, modified adjusted gross income, then you cannot directly contribute into a Roth IRA. However, in a Roth 401k, income does not matter. If you earn $500,000 per year, it's all good. There are some key differences in Roth versus traditional. One reason why people love the Roth is primarily because the earnings made on contributions after having the account established for 5 years, guess what? Is tax-free money. Please note, contributions into the Roth 401k or Roth IRA gets zero tax deduction from your earned income today. So once again, suppose you're age 35 and single, making $100,000 per year, and you contribute 20% of your income, $20,000, into the Roth 401k. That will not reduce your taxable income to $80,000, but remain at $100,000 in this example. But here's why I like the Roth IRA. Number one, although traditionally, if your income needs will be lower in retirement and you assume to be in a lower tax bracket in the future, getting a tax break today and paying lower taxes in the future seems reasonable. However, with all the government spending and so forth, who knows what taxes will be in the future? The Roth gives you tax-free benefit on withdrawals. Number two, when you contribute into a Roth IRA, you must be age 59 and a half, that's considered retirement age, to avoid early withdrawal penalties of 10%. Also, you must have the Roth IRA account established for 5 years, and that begins January 1st in the year you establish your Roth, to have withdrawals tax-free. So let me give you an example. Say you add $3,000 in year one, $4,000 in year two, and another $3,000 in year three. So that's a grand total of $10,000. The account has grown to $15,000 because of the market, in which $10,000 is what's called your cost basis. And the additional $5,000 is your capital gain. But let's just say you have an emergency need and you need to access $5,000 and you decide to withdraw the funds from your Roth IRA. The IRS says, no problem. In the instance of a Roth IRA, the money you have already been taxed on, whether it was after-tax contributions or you had a traditional IRA and you converted it into a Roth, the IRS considers the basis money to be the first money withdrawn, no matter how long you've had the account or how old you are. So a quick rule on the Roth 401k, as that will be determined by your employer's plan rules, so make sure that you reach out to your company. Also, if you've had the Roth 401k for 10 years, then decide to leave your firm and roll over your Roth 401k into a Roth IRA, the 5-year clock starts all over again. So the 10 years that you had in the beginning, the 10 years that you've been putting into the Roth 401k, it doesn't give you that 5-year benefit. So therefore, I suggest opening a Roth IRA as soon as possible to begin your 5-year window prior.